morning, everyone, and welcome to today's edition of Frontier Opening Bell. It's Thursday, the 25th of June. I am Bosin Omofaye. The big story across the world is the World Economic Outlook update from the IMF. That's the big story. But quickly give everyone a chance to see where we finished off on some of the equity indices on the continent on Wednesday. That's your snapshot as we bring them to you on a daily basis. South African market was down 1.85%. The Kenyan market lost 144 index reading, 1.43% on the back foot. The Egyptian market, 2.55%, a roaring day for the North African largest stock market and economy as well. It looks like Egypt is now the poster boy on macroeconomic and currency on the continent. Ivorian market, the BRVM, was down 0.2% in Nigerian market. That's the NSE All Share Index, 0.38% in negative territory. Take it away. Let's go to the East African markets. And of course, we're going to start very quickly, drill down into the IMF latest World Economic Outlook reports. The forecasting global economy will shrink 4.9% in 2020. With a rebound to 5.4% in 2021. So let's throw this straight to Ali Khan Sachu, who is one of my guests. He's sitting down in Nairobi. He's a CEO at Frontier Africa Reports, as well as Luke Ofojebe, who is the team lead in charge of equity research at Vetiver Capital here in Nigeria. Let's get two of you started on this note. Ali, first, sorry. What's your take from this report, drilling down in particular to SSA, Sub-Saharan Africa?
So what my key takeaways from yesterday's report was globally the IMF has down-tilted GDP for the world since the April release. So that's, I think, speaking to the external conditions for the continent. With respect to the continent, they downshifted their GDP forecast for South Africa. That was my takeaway, but they were looking for a more muscular rebound in 2021. So overall, I think it was pretty downbeat. I think she said practically every economy, or 93%, are in recession. These are very unusual times. And spoke to the fact that really the recovery, it's a medical emergency first, and then the recovery comes once that medical emergency is resolved. So that was what I took away from that. Just to overlay that with, yesterday we hit highest number of infections globally, 175,000. This thing is accelerating for now, it's not decelerating. Just to touch on Africa from the COVID point of view, it took us 98 days to get to 100,000 cases, Boasson, 18 days to 200,000, 12 days to 300,000. So even here, we were a bit of a lagging story, but we're now, I feel, getting into a very fast accelerating phase. With respect to Kenya's stock market was, as you said, weak. It's been on a downdraft for this week, in part because half of the market capitalization is Safaricom. The market has been taking Safaricom lower because of the extension of that mobile money waiver that we spoke about yesterday. Estimates are that it's going to cost Safaricom about $135 million. So, meaningful hit that they would get from that. And then just to touch on a couple of other of your stories, AXA, appointment of a Google East Africa CEO, but more interesting AXA story is they're drawing down $25 million from the parent company. That was announced earlier in the week, and that speaks to two things to me. One is that the balance sheet is being softened up here because of what we're seeing, but also speaks to their strength that they can go to their parent and get that kind of money. Your final story was about tax. this remains a circle that's very difficult to fix. Most economists are worried that the government is making a very big call. Most of it will have to be domestic, I fear. But for now, as we've discussed both in Nigeria and in Kenya and in other parts, the domestic market has been very liquid and has been oversubscribing for much of this local bond issuance.
So we got the news yesterday, Ali, that the Kenya Central Bank has extended the free mobile money transfer period. That's good news.
Yes, so this is where they basically made it free for you to transfer up to $10 on mobile money. This was in reaction to the slowdown of COVID. But this is the most profitable segment for Safaricom's M-Pesa. So it's a hit on Safaricom, but my overall view is it's a short-term hit, but it's a long-term brand building opportunity and entrenchment opportunity. You're going to get a whole bunch of new people coming on board, and when that waiver elapses, you're going to have a much stronger business, I think, going forward.
I like that. Safaricom will be remembered as the guys who saved the day when the pandemic is over. So as you said, at least a big chunk of the customers will stay back on that platform and say, well, why don't we just continue being jolly good fellows? I see that. It's a PR thing. It's a good one. It's a good win.
It's a good win, and I think
it's a good win.
Take a bit of pain, but long term people will forget it. It's the entrenchment of mobile money, and I think they'll reap the reward. But it's a little bit down the line.
Yes, I'm sure they're doing the numbers right now in Safaricom in the boardroom and the management meetings. They're trying to do the numbers.
That's right. So they came out with this figure, $135 million cost, probably if this thing runs through December. M-Pesa is the jewel in Safaricom's crown. They make more money top 5 banks in Kenya. So really, it does have an impact. The share price is adjusted because of that. But I think when people look through the noise, they're going to see that this is a very positive situation in the medium term.
Great. Okay, so let's switch on a little bit to the Nigerian marketplace. The Nigeria's Federal Executive Cabinet on Wednesday approved the economic stimulus plan. The cost of that is 2.3 trillion naira. Meantime, Fitch says Nigeria's debt is rising and the financing gap may trigger a rating downgrade. Meantime, Ghana is issuing about 800 million cities in 5-year treasury bonds this year, and of course, this week. And then the Republic of Benin got S&P affirming a stable outlook over the country's rejection of the G20 debt plan. So Nigeria's finance minister also says yesterday that Nigeria is not seeking a deferment of repayment on its commercial loan and bilateral loans as well. Luke Ofojebe at Betiba Capital, what's your take on the Nigerian story?
I'm going to start with what you mentioned last, that the government is not interested in seeking debt holiday or debt forgiveness in the meantime. In my view, I think that's a good move by the government because it has long-term implications basically. So essentially, when you seek debt forgiveness, what it means is that you won't be paying interest on your debt, or you might not be paying the principal portion of your debt during that period. But the thing is that in subsequent years, when you go back to the debt market to raise debt from these foreign investors, they are going to revisit this experience and they will punish you for it. So they are going to demand more. For the ones that will be interested, a number of them will have to turn their back at you because they won't trust in the fact that they will get their capital back later on. So I think it's a good move by the government. However, when you look at the situation on ground, looking at the revised budget, the deficit is about 5.4 trillion. And the focus of the government right now is to raise as much debt as it can from the multilateral institutions like the IMF and the World Bank. So far, they've been able to raise $3.4 billion from the IMF and they plan to raise $2.8 billion from the World Bank. So everything sums up to about 2.2 trillion naira, and that's even not up to half of the budget deficit. So what we are seeing is we will see more pressure on the domestic markets in terms of the government's debt raising program. We will see the government being aggressive in that space. Nonetheless, I don't think the government will be able to raise as much debt as it can to meet up with the budget deficit. So we'll be seeing significant budget underperformance this year, mainly due to the fact that the government will not be able to raise as much debt as it should be able to finance the budget. So that's just the summary of it all for Nigeria, basically.
Interesting about this debt conversation. Ayode Jiebo, the CEO and chartered trader at Afrinvest Securities. Good morning. Welcome to the show.
Yeah, good morning.
Ayode, the conversation around debts, debt repayment, issuance of bonds, new treasury bills by government, right and left, right and center. Benin Republic says it's not going to sit down with the G20 for a debt relief program. Angola has gone forward to get some kind of a relief, 3-year relief from Beijing. Nigeria says, look, we're not going that route. South Africa was the first to come out and says, no, we're not doing that. So with what the IMF released in terms of the World Economic Outlook yesterday for Nigeria and Sub-Saharan Africa, and Nigeria's plan to get additional 2.3 trillion to finance the economic stimulus plan. What's your take on this?
I think the basic thing I think that we first need to understand is that we can't do without borrowing. But the major concern is most of the borrowings have been going into non-productive sectors. Those sectors that will not be able to repay this loan in the future. Yes, government is holding on to, they are borrowing more from very multilateral loans that comes with very low interest rates. But we need to be very disciplined. We need to, it's not sustainable. If you see the budget performance for Q1, very alarming. 99% of the total revenue was used to service debt. It means that all other fundraising they've done has been used to either pay recurrent expenditure, mostly recurrent expenditure, because if you also look at that report, capital expenditure was less than 300 billion. So 300 billion naira. So it's, I feel that if we're able to get a relief, it's better if the opportunity is on the table, we need a debt restructuring, because debt servicing is also becoming unsustainable for us. So, but in terms of raising and trying to see how we finance this, I believe with the amount of liquidity, expected maturity, we have about 6 trillion worth of OMO maturity. Let's assume 50% is for domestic. You have about close to about 600 billion worth of NT bills that will also mature. So it's also possible to be able to raise it in Nigeria. But the question would be, what are we channeling this fund into productive sectors so that we'll be able to pay in the next 7 years, the next 8 years, when those loans fall due?
Okay, let's conversation and insights there. Let's talk about the Southern African market. It's a very big deal for Tito Mboweni, the finance minister in Africa's most advanced economy and the second largest. Inflation hits the lowest level in April for South Africa. Retail sales figures up 2.7% year on year in March. Meantime, Mboweni says the revised budget is deficit forecast to about 14.6% of the GDP against 6.38% previously forecast. So an extra 145 billion rand has been allocated to the supplementary budget to fight COVID-19 impact. And of course, we spoke about the Zambia bondholders forming a small to ensure debt management process. So, Ali, let's get to you on the South Africa's story in terms of a supplementary budget to fight the impact of COVID-19. Nigeria announced 2.3 trillion economic stimulus plan. Of course, just a fallout of the COVID-19 as well. So everybody's throwing money into COVID-19, left, right, and center.
So yes, I mean, you know, Tito Mboweni was presenting yesterday. He's very mercurial and knows how to message the markets as well, in my view, which is an important component of being in that job. And he spoke about closing the mouth of the hippopotamus. And coming from Kenya, you know that the mouth of a hippopotamus is very, very wide. And he says if we don't close it,
Tito knows how to handle. Tito was something else yesterday. I listened to his presentation. He also went into the Bible and talked about the gospel on the mount, talking about going through the narrow path, because it says that's the road to salvation. It says the wider roads leads to destruction, economic destruction. So he was at the top of the game yesterday. You're correct.
Yeah. So very, you know, he's very dynamic, and I think one of the few characters in that South African government who tells it to the South Africans very straight, without, you know, and in a way that people can understand, right? They understand the Bible, they understand the hippopotamus story. But essentially, I mean, you know, he was trying to parlay what is a very tough situation as best he could, and admitting that it's not going to be easy, and that South Africa is going to have to make some very dramatic reforms. I think part of the reason they've gone to the IMF, which was for a long time a no-no for the South African ANC, is that will also give him support in bringing to bear these reforms that he has to bring to bear. He can maybe use the IMF as cover, they can be the bad guys, and he can, so I think it's a double-sided thing. Going to the IMF, money's cheap, of course, and it seems he's getting that 4.2 billion, but I think it also gives him cover to make very tough decisions that need making. To touch on the South African markets, the rand has been softening, 17.45 last time I looked. We had a 16 handle at the peak of this recent rebound. I think that's just symptomatic of risk off globally, of concerns about COVID that we've seen, which has also hit the oil market as well, with Brent just around $40. Zambian bondholders, just to give you guys a sense, we talked about that. Zambian bonds currently trading at 54 cents in the dollar. They've rebounded from a yield of 55%, can you believe it, in dollars, to about 35%. And what the bondholders are doing is getting together in order to negotiate with the government. So that's a positive development, I think, for the Zambian government and for those bondholders. But you know, really, this is in Lebanon-type territory when you look at it on a pricing level. And then your final point was about Seychelles, AFDB extending $10 million loan as the economy reopens. Seychelles, I've been there, I'm sure you have as well, entirely tourism dependent, blue economy dependent, and really they are looking to open up. The issue will be, you know, will they be like Jacinda and manage to control it like New Zealand have controlled it, or will it just spread again? So it'll be very interesting to watch that as well.
Thank you, Ali. Very quick and a good one around the Southern African market. Where do you see the market for the rest of this week, Ayode Jebo at Afrinvest?
I feel that the stock market will remain a bit fragile. In view of some of the forecasts that have also been sent out, what we are seeing very interesting is the ability of more interest from domestic investors. So we believe that we may see some positioning ahead of the H1 results, which is half year. There are some companies that will still pay dividend, that we still expect that will pay dividend, though may reduce, but the by and large, today, tomorrow, I think market will still remain very soft. our investors will trade cautiously, and we expect any major rebound.
On the equity side, Luke, what's your outlook for today? And this looks like the week we're taking most of the final trading days of the year, technically speaking. Once we get back on Monday, we're wrapping up the month of June.
Okay. In today's trading session, I do not really expect anything major to happen. I think we'll see a session similar to what we saw yesterday, and that has been the trend since the start of the week. So I still see a mix of bargain hunting and also profit taking across major sectors. Then overall, the big question is, where do I see the market closing, negative or positive? In my view, given what we've been seeing lately, I think the market could likely close down today again, mainly due to losses we are seeing in heavy counters. So I expect those counters to still trade lower in today's trading session, especially stocks like Boasment, MTN, GT, Zenith Bank. We've not been seeing strong interest from investors in the meantime, and we understand why this is going on. Like I've always said, economic fundamentals are not really looking attractive at the moment. And like Ayodeji said, H1 figures will start trickling in from next month. And the base expectation is that we do not expect any great results in half year, given that the COVID-19 pandemic actually hit us the hardest in April and the month of May. So definitely turnover for a number of companies will drop in Q2. Bottom line will also drop. And even for some companies, we might be seeing losses after tax in Q2. So it makes sense for investors to reduce their exposure in the equity markets right now and just wait on the sidelines for H2 results to be released.
Okay. A great one. Let's touch on North Africa to start to wind down the show. Egypt, as I said at the opening of the show, is now looking like the poster boy of the continent. The Egyptian Wealth Fund and Hermes says it will get about 76% stake in Arab Investment Bank. Meantime, the country's non-oil import was down 24% in the 4 months on the COVID-19 virus impact. So a few other corporate stories there between Mayor Insurance and Investment. So let's just take quickly the top line story there, Ali. When it comes to Egypt, Egypt's warmed up to the IMF last year, early this year, very quickly, took the bullet, as it were, and now it looks like, is it working really?
So I think, Egypt is a really interesting situation. Let's leave aside the politics, because the politics are quite complex. We've talked about that before, but as an economic prospect, you've got a big market there. They've embraced the IMF program at the time of the devaluation. They have an ability to speak with one voice to international investors and message the markets extremely well. Furthermore, they have an awareness of what needs to be done for international investors to be attracted. They were the darling carry trade for 3 years. They're going to be the darling again. There is a rate announcement later today. I'm expecting no change there because I think they want to suck in more capital from international investors, and they will be able to do it because they know what they're doing. And you saw that big move yesterday in the stock market. It seems to me that this market has got legs and will be the first and fastest out of the blocks on the African continent. And and I think that's a lot to do with their, they've got bench strength in their government. They know how to speak to international investors. They speak with one voice, and they know what needs to be done.
Very interesting. Ayodeji and Luke, when we come back tomorrow on the show, Nigeria's June PMI by the central bank shows that the manufacturing activity is still in the negative territory, reading 41.1 for manufacturing, and about 36.6 on non-manufacturing. So how will all of this play into the corporate news we're expecting in the second quarter from the companies, especially consumer goods, industrial goods, and all of that? Think about that. Tomorrow we'll talk about Nigeria's June PMI and what that means for some of the sectors you folks are watching. I hope that will be in order. Then, of course, we'll wrap up the current market week and go through some of the headlines. So thank you, everyone, for being part of the show. Luke Ofojebe from Vertiva Capital, Ayode Jebo at Afrinvest Securities, and, of course, from Nairobi, thank you very much, Ali Kansacho, the CEO and founder at Reach Frontiers. Thank you, everyone. Have a great Thursday, and let's get together tomorrow morning, bright and early, to continue from here. I'll see you there.